everybody, and welcome to the Fred Report Technical Market Call for August 11th, 2011. Obviously, the market, we were a little bit concerned about the market on the call last week, and we thought we could get down to the levels we saw a couple of days ago in a few months. So one would say the speed of this thing has been very, very difficult to play, and we're doing the best we can, and of course we're also on the road. So I want to thank everyone on the line for bearing with me as we try to answer your questions. I also, by the way, want to put a big thank you, and everyone on the call should thank Jeff Garvaz and Jack Berenberg for putting up with me trying to write and doing the various stuff while I'm on a different time zone. They've done a tremendous job, and the service would not be anything like what it is without them. Okay, so with that, let's get right into it. We got a good, solid short-term buy signal on the FPO yesterday, as well as an inside day, which means that this rally today is the highest probability type of buy signal that I can get, and we should close on our highs for the day through 116, through 117, ultimately, and up into that 120 to 122 area. I'm not sure if that's good or not, frankly, because that would be, in some respects, a bear market signal as well. But if this market suddenly starts to act normal, we should rally and then retest 4 to 6 weeks later. Most of the indicators I follow have either made record lows, like the McClellan oscillator, or in some sort of bear market parameters. So I got to think we're going to have market turmoil for the remainder of the summer, and then see what we do in 4 to 6 weeks. Obviously we get a number of questions on stocks and strategies. I love the high dividend yield strategy. One of the questions we've been having is on some indicators, like on balance volume, for example. Those indicators all on some of the stocks look pretty good, and I would use those stocks. But bear in mind we can have several divergences with the kind of momentum that we have. Any stocks or things you buy now, I would be willing to buy again 4 to 6 weeks from now. So I would be thinking in terms of 4 to 6 weeks for now. Let's talk a minute about the TLT. And first of all, I need to say, obviously, a couple of people have pointed out that the TLT has gone up more than I thought it would do. I have been wrong about the TLT, that is for sure. But given that it's a crowded long trade, everyone is in there, and major resistance is at 110, and my concern is that it has a much sharper drop than people think it could have. So I'm still recommending MUB and LQD, corporates and municipals. I think that they're going to be better for bonds in the long run. But it looks as if bonds are going up, and maybe on a drop we'll see some divergences in the TLT models, and that'll suggest some higher prices there. But right now the others still look better. Those are where I would be putting bond money. We came out with a new gold target yesterday of 189. On the GLD, or 1890. The nearby contract on the COMEX actually got above 1800, so that may seem close, but that's what the numbers say. It is very good. I'm sure you all have noticed that silver has been languishing here. Gold has been leading. That's healthy for the metals. We think the metals are going to continue to do well, but a sharp drop like we're having today is certainly not out of the question. And this drop can carry all the way down to 155 to 160, or maybe even lower. One thing that has been sensitive to gold, and also the turmoil that's way down today, have a look at the Swiss franc, FXF, that's Fred Xylophone Fred. That market is way down. It's down about 5% today. That could really start to fall. And, guys, I'm not giving up on this dollar. I think the dollar can run up here. We'll just have to see. The good news is it's hanging in there. The bad news is it hasn't run yet. I still think it can. We'll talk for just a minute, but I would be cycling some of that gold money and some of that bond money into something like PSAU. The gold stocks have been acting favorably. I think they can act more favorably and outperform the market, and that would be a decent place to go for equity.